This is everything you need to know about the stock market. You might think it's only for the rich, but that's not true. In fact, it's how the wealthiest 10% of Americans build and keep their wealth. Coming up next, we'll show you exactly how to invest with as little as $1. So, why should you invest in the stock market? Well, if you're not investing, you're losing money. It's as simple as that. Inflation, even at just 3%, means your money loses buying power every single year. Investing gives your money a fighting chance to grow and not shrink. To prove this, the average annual return of the S&P 500 over the past 50 years is about 10%. That means your money doubles roughly every 7 years. This is due to something amazing called compound interest, which is a concept every successful investor must understand. Be sure to check out our video on the power of compound interest to revolutionize the way you think about investing. So, what is the S&P 500? The S&P 500 is a stock market index that tracks 500 of the largest publicly traded companies in the United States. For example, think Apple, Microsoft, and Tesla. Historically, it's one of the most reliable and consistent long-term investments. Within it lies some amazing dividend stocks as well. Dividend stocks are companies that pay you a portion of their profits just for holding their stock. You will earn something called a dividend, and it can be paid quarterly, monthly, or annually. For example, if you own shares in a company that pays $1 dividend per share, and you own 100 shares, you get $100 just for owning it. The best part, you can reinvest those dividends to buy some more stock, which means even more dividends, creating a snowball or passive income over time. Another amazing stock investment are ETFs. ETFs are a basket of stocks you can buy all at once. By buying an S&P 500 ETF, you're essentially buying a tiny slice of 500 companies all in one move. It's an extremely diversified and a very smart investment. Something else that is very smart is hitting that like button, subscribing, and turning on notifications. We post a new video every Friday to help you understand the finance world. Now, let's get back into the video. ETFs trade like individual stocks, meaning you can buy or sell them anytime the market's open. Two of the best performing and well-known Vanguard ETFs include VTI and VOO funds. Some legendary investors like Warren Buffett recommend these ETFs and index funds as the go-to investing strategy. Now, with all these pros, do come a couple cons. One of which is expense ratios. Expense ratios are the hidden fees you pay to the company managing your fund. A 1% fee might not sound like much, but over decades it adds up. But do not worry, most ETFs are low expense ratios. Companies such as Vanguard, Fidelity, and Schwab offer great rates. For example, VOO that we mentioned earlier has an expense ratio of 0.03% compared to the industry average of 0.79%. That means if you invest $20,000 in VOO, you'd only be paying a $6 fee. The returns you will gain will definitely outweigh this small fee. The real issue is that some full stock shares can cost $100, $200, or even $300 a share. But what if you can't afford an entire $300 share? This is where we can take advantage of something called fractional share investing. Fractional share investing is when you buy fractional shares, meaning you can invest $10, $5, or even as little as $1 and still own a piece of a stock. This removes one of the biggest excuses where people tend to say, I don't have enough money to invest. The good thing is that most platforms now let you buy these fractional shares. A few of the most popular beginner-friendly platforms include Fidelity, which has more advanced tools, amazing customer service, fractional shares, and zero fees. M1 Finance, which is perfect for long-term investors. It lets you automate your investments into pies, making diversification effortless. It's ideal for hands-off investors. Another platform is Robinhood. It is a super simple to use, zero commission platform. If you'd like to get a free stock on us with Robinhood, click the link in the description. You don't want to miss out. Here's the part of stocks that nobody talks about. Taxes. If you sell a stock for profit, you pay a capital gains tax, and Uncle Sam tends to collect this a lot. What about the precious dividends you earn? Yep, they are also taxed. But don't worry, there is a solution, and this solution happens to be called a Roth IRA. A Roth IRA is a retirement account that lets your investments grow completely tax-free. You can invest post-tax dollars and your money grows without ever owing the IRS a dime once you retire. The amazing part is that you can invest in the exact same index funds, ETFs, and dividend stocks, all inside of a Roth IRA. Do you want to keep more of your money and pay zero taxes in retirement? If so, check out our video on Roth IRAs. It's a must watch if you're serious about building tax-free wealth for the long haul. Thanks for watching. We'll see you in the next one. Remember to always save smart and invest smarter.